Good morning, everyone, and thank you for joining us. Really appreciate your time and engagement, and welcome to any new investors and also our existing investors. I think it's always good to start with a little bit of just context setting, and then we'll delve into questions. So I'm just going to run through the slides here briefly. Yeah, and I think just to give a bit of context about the rare earth space specifically, and I think the West has a real problem in the sense that rare earths are no longer a mining story. This is about national security. It's about sovereignty. It's about custody of supply. And we've all seen China as controlling mining, processing, and separation. And if you think about new mines, these mines really take, 6, 10, and longer years to actually develop. So I think that's the context within which we are developing Jupiter. Now, I like this slide, and I think to me, this is a very interesting slide, and it gives you a real understanding of why this really matters. And rare earths are really these quiet enablers of advanced economies. And if we look at the magnet rare earths, NdPr, dysprosium, terbium, these are performance critical. They're not optional inputs into technology. Demand is structural. And I think if you look at rare earths in any of these technologies, they're a small component of the end product. But and demand, I suppose, is price inelastic, which means that even if prices increase significantly, it will not impact demand. And there's no real practical substitute for any of these. Now, to probably give a few data points we've seen in the media, Reuters recently reported that neodymium praseodymium, or NdPr, prices have now exceeded $110 per kilogram. That is US dollars. And this was a floor that was set for MP materials before. And if you think about this, the middle of last year, we were sitting at $63 per kilogram. So a significant increase in terms of pricing here. Bloomberg has reported few price data points in terms of yttrium reaching record highs. The same with dysprosium and terbium, which is some of the two, or the part of the four that really makes up these magnet rare earths. Now, Jupiter is the answer to this. And I think for me, I was at Jupiter last week with the team, and it was quite an exciting week for us. We started drilling at Jupiter. We announced that yesterday as well, both Jupiter and the Wyden Brothers project. But what really reinforced to me when I was being on the ground there was just the sheer size of Jupiter, and also probably more importantly, that wider scale of our brother system. It's a tier 1 location, infrastructure rich where we are based. Native title have been extinguished, and if you can see the photo there on the slide, it's really relatively low environmental sensitivity. So absolutely delighted to see the next stages of the development of the project itself. Now, I think just very briefly on this slide, what we have shown, apart from what makes Jupiter different and then what differentiates us, is that we have been able to produce commercial quality mixed rare earth products, both in terms of oxide and carbonate, and we'll talk a little bit more about that. And we've also, through that same flow sheet, have seen that we have leverage to deliver some byproducts. And, this is exciting work as we continue the development of Jupiter. Now, I want to just stop on this slide briefly. And I think, to me, the one piece here that really stands out is that if you think from discovery to first mixed rare earth oxide production, that was 23 months. We've now, in February, produced our first mixed rare earth carbonate, also high quality and meeting those requirements. So to me, this is a record speed for any project development, and this can be compared to our peers in terms of timelines. So we have moved very fast through this, and the reason for that is because we've been focusing on a systematic process and de-risking the project. And we will continue to move along with the required pace and speed to unlock value. But let's talk a little bit more about the actual product that we've produced in the announcement. So in terms of the recent announcement in the production of a mixed rare earth carbonate, it was a high quality at 58% TREO, and this was produced by ANSTO, which is Australian Nuclear Science and Technology Organisation. So really an established authority in the space. Our magnet rare earth piece to this was 24%, so very strong NdPr, terbium and dysprosium components or distribution. And our recoveries for this first pass was 80%. Now, there's a defined path here for us to actually increase this further, and we haven't optimized this. This is really unoptimized, and the view is that in a commercial space where there's more recirculating loads, where you extract more of those rare earths, that recovery will be closer to 89%. But 80% is an exceptional achievement for an initial pass in terms of production. Now, I think I want to just talk a little bit here. What this really does for us, it confirms that Jupiter can produce a high-grade commercial quality product, and we've produced both type of intermediate products that is sought after, that downstream refineries are looking for. That's a mixture of oxide or a mixture of carbonate. But if we talk a little bit about the process, this process wasn't optimized for reagent use or reagent consumptions or for the actual process parameters. What we really looked and tried to achieve here was product quality and recovery. So optimization is the next step, and we've got a number of streams running at the moment. So ANSTO, Minutech-AMML, Finnico laboratories are running a number of parallel processes. And we have a number of levers here that we have to our disposal in terms of optimization. So one of that, and again, the differentiator for me when you look at Jupiter is the fact that we can beneficiate up front, which means that we've got this opportunity to produce intermediate concentrate before we go to hydromet. And what the difference that makes is that we have control over that quality of the intermediate product, and therefore we can improve or change that composition and therefore further improve the hydrometallurgical processes. The acid bake process, so there was a standard acid bake process. We haven't refined bake temperatures or residence times, so these are levers that needs to be optimized. The leaching process itself, durations haven't been optimized. And then, as I mentioned, in terms of recoveries, we obviously, in terms of the recycling of impurity removal stages, if you recycle those, you get further upliftment in recovery as you extract more of those rare earths. So there's a lot of work here that we can still do. And then, then you touch on recycling of reagents and regeneration. So exciting work still in the pipeline for us to move forward. But further to that, we are testing a number of alternative pathways as well. So acid bake was one process. We are evaluating a few other processes, and as a result, the flow sheet that will go into the scoping study and that will be locked in might materially different from what we've done so far. But that's all part of this de-risking work that we do as part of the scoping study and the scoping study scope. The important thing is the first MREC, first MREO, mixture of oxide and carbonate, is a proof of product, and now we're moving forward to prove the structure and that flow sheet. So in terms of probably just touching on a few of the next steps for us here in terms of catalyst. So Sedgman has been appointed. We've announced that they're the lead engineer for the scoping study. SRK would be updating our resource. So the infill drilling that's taking place at the moment is key input factors into our scoping study. And part of the regional work that we're doing in the wider brothers is also co-funded further. So there's grant funding available for that. So capital efficiency is an important piece for us. And then, of course, the metallurgical optimization, as I mentioned, is a key piece and key input into the scoping study as we move forward. So probably to just bring this to conclusion, it's always been for us about scale, simplicity, and speed. I think we've fully commercially focused here. We've got a very technical, credible team, and the project is execution ready. So the scoping study is that next major technical and commercial milestone for us as we move forward. The flow sheet is not theoretical. We've been physically testing it and advancing that through increased scale. And the progress now is really to continue with this optimization, and all of this will come together in the scoping phase. And apart from that, work is happening in the background as we are scaling up on the beneficiation pilot plant work. The metallurgical optimization work is we'll be producing specific physical samples, product samples, which will assist us with meaningful engagement with off-takers and downstream partners. So I think that's probably just a little bit of overview to set the context, Dannika. So I'm happy to jump into questions.
Perfect. Thank you, Jacob. It's so helpful to get a live run through the preso from you. I'm sure all the shareholders appreciate it. The first one is from Sam, and he's asked, is the reported acid consumption in the mixed rare earth carbonate process a concern for you?
That's a good question. Not at all. I think it just briefly touched on that. I think the report on intensity in terms of reagent really reflects this validation configuration. It's not an optimized flow sheet yet. And I think, bring it back again, if you think, from discovery to where we are in terms of first mixed rare earth oxide, that was a 23-month period. So it's extremely fast compared to our peers. But being an optimized, I think to explain the process probably a little bit better, when you go through a metallurgical flow sheet and validation, these aspects take quite a bit of time, because there's a number of parameters here that you can change. And each time you change a parameter, you need to do a full set of analysis, laboratory analysis to understand what changes you've made. So you can't change all the parameters at the same time, because it's difficult to understand what is really optimizing the process. And that is what we're doing. So we wanted to report to the market the update in terms of the work that we've done. We are now busy with those optimization pieces. And as I mentioned, there's a lot of levers that we can pull here in terms of bake times, leach times, that recycling piece. But also we are exploring other process pathways. So what might go into the scoping study might be different from what we've reported so far. But the key is the mineral. We've shown that the geology and metallurgy works, and we can produce a quality product that meets commercial grade.
Okay. And why was the recovery approximately 80% and not higher?
Yeah. Well, again, I might sound like a broken record, but this is an exceptional result for a first pass. And 80% is the cumulative recovery for the hydrometallurgical piece all the way to precipitation. And I think, it includes two stages of what's called impurity removal. So once the rare earths go into solution, you want to extract some of those impurities. And each time you lose a bit of the rare earths, but if you recirculate those loads, you capture those rare earths again. And that hasn't been optimized. So the view out there is we will probably comfortably get those recoveries up to about 89% for the hydromet side.
Okay. And a few questions on this one. Is a 58% TREO mixed rare earth carbonate product considered a commercial grade product?
Yeah. No, another good question. And it all feeds into absolutely what we're looking at in the scoping study. But 58% mixed rare earth carbonate. If you think about the TREO levels for commercial mixed rare earth carbonate, sits around, say, 40 to 45%. That's a common standard. If you look at high grade mixed rare earth carbonates, it's sitting between 50 and 60%. So we're sitting on the higher spectrum of the more higher grade MREC. So yes, I think it's a very good outcome.
Okay. And so last technical question on this, but what is the difference between the previously reported 86% TREO, the oxide, mixed rare earth oxide, and the recent 58% TREO MREC? And do they represent the same underlying value?
Okay. Yeah, I have to think about that one. It's an interesting question. So I think we reported an 86% mixed rare earth in October last year. February is now mixed rare earth carbonate. So these are two distinct different products. And I think the important thing is it doesn't change the underlying rare earth basket. So oxide is a higher grade because it contains the rare earths in oxide form, and therefore there's no other minerals in this matrix that makes up the matrix for a mixed rare earth carbonate oxide. Apologies.
Mm-hmm.
In the case of a mixed rare earth carbonate, it contains carbonate and some moisture, and therefore the matrix is made up of different elements, and as a result, there's less space for the rare earths, and therefore it's slightly lower TREO. But the actual contained rare earths remain the same. So at the end of the day, if you think about commercial value is driven by the contained rare earth metal oxide units and the basket composition. So your distribution in terms of the specific rare earths. Now, that's probably not an easy way to explain it, but if I simplify this a little bit, if we assume that we produce 1,000 tons of TREO, so that's your total rare of oxide that's contained. And let's say we produce, for simplicity reasons, we produce a mixed rare of oxide that's 100% TREO, then the product that you've got available to sell is 1,000 tons of mixed rare of oxide. If you produce that in the format of a carbonate, and let's just say that carbonate is 50% TREO, then you're going to produce 2,000 tons of mixed rare of carbonate. But the actual contained in both of those is 1,000 tons of TREO. And the valuation of that, so the commercial value of that, is driven by the metal content. So although you've produced twice as much carbonate, the actual metal content that you get value for is the same. I hope that's a simplified
It makes sense.
ways.
Yeah. Yes. No, that makes a lot of sense. So thank you for that. Lachlan's just prompted me in the chat on timelines and development. So I might move to those questions now. Firstly, why does the company reference a final investment decision in 2029?
Yeah, look, I think it's important to have some sort of indicative timeline in terms of, because that's how we phase the project. And I think, as I mentioned previously, things do take time. I think a 2029 reflects a relatively conventional development path. So if you look at normal project development, it goes through study phase, permitting, and financing. So this is indicative. It's not a commitment at this stage. And I think these timelines will evolve as study outcomes and policy settings change. So for me, FID is that commitment to construct. But before that, there's an enormous amount of work that goes into the engineering design to get that finalized, the permitting aspects that sit behind that, funding and financing that needs to be finalized. So, and we'll progress through those methodically. And as the project mature, we will explore opportunities of how can we optimize this timeline. And again, that will be subject to technical, regulatory, and funding considerations. But yeah, I think it's a very indicative timeline, and to just at least give the market a sense of where we are.
Okay. And Colin's asked where Jupiter currently sits on the Lassonde Curve, the mining development curve.
That's right. Yeah, very, very interesting. So, I mean, the curve just takes you through the various stages of development of a project. Now, we're far beyond discovery and resource definition. I mean, that's finalized. We've moved through the beneficiation piece. That's been validated at bulk scale. We are busy, we've just delivered that mixture of carbonate, oxide, both commercial quality. The scoping study is underway. So we are really transitioning into the early engineering development phase on the curve.
Okay. And a few questions were received on Mt Lindsay. Can you tell us what the company's current strategy is regarding the Mt Lindsay tin tungsten project?
Yeah, look, Mt Lindsay is a interesting project. I think for me, it's always been, when I looked at Critica, Mt Lindsay and Jupiter, both were very, very key projects. And we've always seen that as a strategic asset to the company and provides us really with this portfolio optionality, I suppose. Now, our focus has been really on Jupiter and developing the rare earths. But if you look at Mt Lindsay, it is still one of the largest undeveloped tin tungsten deposits globally. Jupiter is currently that primary development focus for us, but I think now with the scoping study well underway, we've got an engineer appointed there. We've got multiple processes running through competent laboratories on the optimization piece. And Jupiter is really transitioning into this next phase of engineering design. So that has allowed us a bit of capacity now to start to re-engage and more actively look at Mt Lindsay. And I think, we've seen meaningful shifts in the tin and tungsten pricing, both obviously being critical as well. And if you compare that to where we were probably a year ago, there's significant increases in pricing of both those minerals. So given that market backdrop, we are reviewing Mt Lindsay in more detail from a strategic and commercial perspective, and we'll keep shareholders posted on any progress or any material developments as we move through this period.
Fantastic. And so moving to sort of more corporate capital and share price questions. After the previous capital raise, are there any further capital raises expected?
Look, the company we're fully funded for our current works programs, so the drilling, scoping study, metallurgy, and beyond. Future funding requirements will depend on study outcomes and development and timing. But it's a key piece, and capital discipline is obviously central to board decision-making processes. We are also actively looking at non-dilutive funding pathways where appropriate, and we're applying for these grants when they become available. We also, I suppose, with regards to the Australian government and the Critical Minerals Strategic Reserve framework, I think that's a very important piece in supporting the supply chain. And we're working very closely with AMMEC. There's a number of other industry players that we're working alongside. And that's really to engage on policy discussion support, specifically supporting the development of domestic rare earth development. So there's no funding arrangements assumed at this moment in time, and we'll engage at the policy level and monitor opportunities that that may come up to advance our project.
Mm-hmm. Brilliant. And I guess this is the $1 million question, but why do you think the current share price is not reflecting the perceived potential of Jupiter?
There's certain things in our control and certain things out of our control. And I think the market conditions, liquidity influence, that all influence short-term pricing. Development stage companies, I think we typically see re-evaluation as technical risk reduced through studies. And I think the market often waits for, defined economics rather than just standalone resource. So I think from a Jupiter perspective, we've just shown this absolute enormous scale. We've shown that the de-risking process, and now we're busy with this with the scoping study, and that's this defined engineering phase. And I think that will take time and will eventually reflect in valuation. But our focus remain on measured technical milestones that reduce the project, and we will continue on that path and focus on what's in our control. So as clarity increases, I suppose, around development parameters with the scoping, we expect the market to better assess value of our project.
Yes, and I really like that slide that you did on the execution where you showed the 23 months. So delivering on what you say you're going to do is certainly a way to build credibility in the market and build value and keep going along doing what you're doing. Another question, I've got one from Malcolm here in the chat. It's basically on operations and infrastructure. broadly speaking, what is the plan for water supply to support the beneficiation plant?
Yeah, look, as part of the scoping study, there's a number of aspects around environmental hydrology and the like. So I think firstly we're in a tier one mining jurisdiction, so nothing new to mining, or at least water use is nothing new to this area specifically. And the final configuration of this will come through our scoping study and permitting work.
Okay. And why, oh, so there's a bit of a media one. Why has there been limited broader media exposure regarding Jupiter, do you think? If
That's
you believe that to be true.
That's probably one for you, but
Yeah.
I don't think that's probably not a correct statement. I think our priority has always been technical delivery and regulatory disclosure, media engagement aligned with key material milestones. And we've always favored communication over promotional activities. I think, for me, we're advancing Jupiter as a long life strategic magnet rare earth development project. And if you think about institutional capital, government agencies and off-takers, they are really attracted and important for them are the likes of metallurgical validation, which is where we're working on our pilot scale results, the resource upgrades that we're busy with, clear development sequencing and capital discipline. So I think it's not about volume of media exposure that's important here. So, but having said that, I think we have been extremely busy to share the story with the rest of the world, and that's very clear from social media feeds and the like. So, I'd welcome investors that's new to have a look at the media that's out there.
Yeah, absolutely. You can send us an email and we will add you to the distribution list for receiving the video interviews that Jacob does on pretty much a weekly basis or a daily basis in some cases. We've almost run out of time, but I guess just quickly a bonus question from Jack. He's asked about potential byproduct credits. Is there any economic value in the light rare earth space, do you think, coming from Jupiter, or is it that's going to be something that comes out in the scoping study?
It will come out the scoping study, but I mean, if you think about light, the main basket really, we've got all 17 elements in terms of light rare earths. Neodymium, praseodymium is actually light rare earths, and then terbium, dysprosium are heavy. But what we have seen in the flow sheet is the resource contains scandium, gallium, and a few others that we are working on at the moment. And of course, iron, high quality iron concentrate. So all of this is aspects that will feature in the scoping study, and we're working through that. And obviously, there's a number of metallurgical processes underway in the background to firm up, potential flow sheets for those.
Okay, brilliant. Well, we're out of time. So, Jacob, do you have any final comments you'd like to leave shareholders with today?
Look, I just think, again, just coming back, I think Jupiter is being advanced as this long life strategic magnet rare earth development project. We're moving with the technical credibility, and we're moving at pace. And I would invite investors to keep an eye open for scoping study and scoping study results coming up.
Yeah, lots of exciting things coming up for sure. Well, thank you, Jacob, and thank you to all shareholders and potential investors who joined today's call. If we didn't get to your specific question, please feel free to email us. Our details are on the bottom of the ASX announcements, and we always love to hear from you. So please do feel free to reach out. A replay of this webinar will be provided tomorrow on the company's website, and we'll close off the webinar there. Thanks again. Thanks, Jacob.
Thanks, Dannika. Thanks, everyone.